Day trading for beginners, technical analysis versus fundamental analysis. I am Clay from claytrader.com, and that's what I'm going to be talking about here in this video. And it's a very good question. I remember when I was new to the markets, just getting started. Okay, I keep seeing people talking about technical analysis, fundamental analysis. Sometimes I see these two people like arguing against one another, which one's better, which one's worse, why one is a joke, why one can be easily manipulated, so on and so forth. But my goal here is to just take a step back and break down what exactly is technical analysis, what exactly is fundamental analysis, and what might be best for you as a day trader and what might help you make the most money. Because at the end of the day, that's what we're all getting into day trading about, right? Day trading in the stock market, day trading in the crypto market, in the Forex market, in any sort of market, the end goal is to make money. And this idea kind of came about because I do offer another YouTube channel where I do analysis from a technical analysis standpoint. And somebody just threw out there, maybe read about the company. Kind of a backhanded comment, like implying I don't know what I'm talking about because I haven't read about the company. I'm not well versed in the company. And that's really the big first talking point is, how are you getting versed about the company? How are you forming your opinions about the company? And that's really the big breakdown. And that's going to be the difference between fundamental analysis and technical analysis. And I'll just let the cat out of the bag right now. It's up to you. I'm not going to sit here and say that one is better than the other. What I am going to say, though, is that it's up to you to figure out what fits best for your risk tolerance, what fits best for your schedule, what fits best for your comfort level. And for me, using charts, so technical analysis just fits best for me. It fits best with my mind. It fits best with my schedule. And that doesn't mean that it's the right or wrong way. It just means that it's the best for me. So in order to kind of break this down the most, I just want to look at a specific stock and then talk about why certain people would be buying at a certain location. So here we are looking at a technical chart for Tesla. Maybe you've heard of them, kind of a big deal. But the idea becomes, okay, well, why would such and such buy Tesla stock? So let's look at, first off, the fundamental person. Let's just say that, you know what, and I'm going to just throw this line up here, that they want to buy right here at $732.50, which is what that green line is representing. Now, a fundamental person might arrive at that conclusion by saying, I've looked at Tesla's cash flow statements. I've looked at Tesla's income statement. I look at their management. And I've looked at all these different metrics. I've looked at their debt. I've looked at their profit margins. I've looked at, and when I get all these numbers, then I start to do different ratios. So I'm looking at a PE ratio. I'm looking at the Ford PE ratio. I'm looking at a bunch of different types of, metrics. Gross profit, net profit. My forecast? What do I think things, can be next quarter? What do I think things might be next year? Do I think that there might be some sort of, economic development or economic, kind of headwind that's going to cause such and such other things on the balance sheet to change? And how do I think those things on the balance sheet will change? Do I think that Tesla's going to have to take on more debt, or do I think they're going to have less debt and therefore maybe more free cash flow? But all that sort of fundamental analysis, at the end of the day, when they dig through all that paperwork, when they dig through all those documents and do their calculations, do the metrics that they believe matter the most, that they believe will behave in a certain manner, then let's just say that after doing all that, they're like, as a day trader, I feel as though my entry point is going to be right there, that green line, $732.50. And the crazy part is, you could then set that person next to another person that does fundamental analysis, and that person could easily say, no. I think that variable is going to change in this way because of that. And then when you factor that into this equation, and then you also boil in this, that, and the other, my entry point, what I think is a good deal, what I think is a logical entry point for Tesla is $725, maybe $700. Point being that even within, so not only is it technical analysis versus fundamental analysis, and both are okay, but both will maybe have different ways of getting and arriving at a certain location, but even within each individual camp, you're going to have disagreements. You're going to have different opinions because everybody's going to look at that data in a different way, and everybody's going to think that the data might change in a different way, and there might be different causes. And I think I agree that that's going to be a cause, but you're way overestimating the impact. I don't think it's going to be that impactful, and you're going to have all sorts of disagreements. But that's what it's all about. All those balance sheets, all those documents that you're going to have to dig through, comb through to find that data, what data you want, how it's going to behave, how you think it's going to behave, and then you're going to have to arrive at some sort of what you believe to be a fair market value for a stock. So in this situation, like I said, $732.50. Now, somebody like me, a technical analysis person, is going to look at this chart and they may arrive at the very same thing as, okay, yeah, I do like $732.50, but for a completely different reason. I like that entry point. I think it makes a lot of sense, not because I've looked at any balance sheet, not because I've looked at any sort of cash flow statement. I'm just looking here and saying, last time it got down to $732.50, look at that. Nice bounce. Okay. Wow, cool. Last time I got down around that general area of $732.50, man, another nice bounce. That's cool. Oh, look, it's down here at that level again. Maybe, just maybe, it'll bounce. Now, I'm not sitting here saying that, okay, it's guaranteed to bounce. No, there's nothing's guaranteed. Fundamental analysis, technical analysis, there are no guarantees. However, is it at least logical? Is it at least rational for someone to say, you know what? I think this thing could potentially bounce. Is it okay to throw out that question? Well, yeah, it absolutely is. Why? Well, because it's happened 2 times before. Again, does that mean that it's guaranteed to happen a 3rd time? Absolutely not. But the point here being is, it's not like it's some sort of random thought process. It's not like it's some sort of random, idea to throw out there. Just like it's not random for some sort of, fundamental analysis person to arrive at that entry point because, hey, you know what? They have a bunch of different equations that they have, that's led them to believe that's a fair market value. So a technical analysis, and I say schedule, is fundamental. You're going to have to put in more time. And you can bring the time down, but you have to dig through those numbers. Those numbers are always changing. You have to be able to figure out what works best for you in terms of what equations and what ratios you want to use and how many ratios. But that stuff does take time. For me, technical analysis doesn't take much time. Now, of course, when you're learning, it's front-loaded in time. But after you learn, for me, it's okay, yeah, wow, yeah, it's bounced from here, bounced from there before. Hey, it's at that area again. That could be a nice bounce point. But that's just the difference is all a technical analysis person is using is price history and volume, right? All I'm doing, now there's a little bit more to it. What we're looking at here are called candlesticks. But even at the end of the day, a candlestick is all that's doing is telling you what's going on with the price of the stock. And based on how the price has behaved in the past, based on how, all of these dynamics are coming together, you can look at a technical chart, which is right here, and no balance sheet needed. I'm just looking, and a technical trader is just looking at the price action, the history of it, and then they're trying to form logical, probabilistic game plans of what they think will probably happen. And then, of course, based on doing that, part of that trade plan is, all right, I think this will happen, but if it doesn't, if I'm wrong, let's make sure that I have low risk compared to good upside reward. And in this situation, you can see that, Tesla got down there, spent a little time around that area, and then made a beautiful bounce off that area. And both people could have arisen at that entry point. Sure, they got to that entry point for different reasons, by different methods, different approach and strategy. But, it's more than rational to think that both people could have arisen, arrived at that exact same entry point of, $732.50, that's a fair market value. And that's the difference, is just how are you getting there? Technical analysis person, just using former price action. In my opinion, the best way to go about that is using candlesticks, but just how the price behaved in the past, how do I think it might behave in the future? Fundamental analysis person, they are knee deep in all that paperwork, and I get it. Some people love that stuff, and cool. If you love that stuff, if you love digging through cash flow statements and income statements and, looking at PE ratios and all that sort of stuff, then fantastic. It sounds like fundamental analysis would be a great, approach for you within the world of, trading. But for me, I want to make this as quick as possible. I want to make it as easy as possible. And for my mind, technical analysis just fits best, makes it easiest for me. So that's the real difference, is just a difference of information that you're using to arrive at the same thing. Because both people are arriving and trying to arrive at the same thing, and that is this a good value? Is this actually a good entry point? And a good entry point, wow, there's a lot of ways you can get there. So that is the big difference, and hopefully this helps out. But like I said, at the end of the day, you got to do what works for you. You got to figure out what you feel most comfortable with, and that's part of that comfort is going to be just how much time you have in your day to devote to, either digging through piles of paperwork or just to pull up a chart real quick, look at a few things, and then you can start to determine a trade plan relatively quickly after you get enough experience with it. So that's the big difference. If you do have any other questions or anything like that, please leave those down below. And also, if you do have any other suggestions for kind of just very basic, very 101 videos such as this, then please, I love to hear from you as subscribers and viewers. So just leave those suggestions down below. But let me know. And also check out the channel as a whole. Hopefully you like what you see enough to hit that subscribe button, as I'd love to have you as a subscriber to the channel. But now you know that the big difference between fundamental analysis and technical analysis. But at the end of the day, it all just boils back to, are you getting a good entry point? First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.